some more weight this morning. So let's just wait by for the first tick on the index. There it is, down about 25 odd points. The Sensex is down about 80 odd points. So some bit of, trepidation in the market, if you'd want to call it that. The top losers, Eicher Motors down about 1%, Hero MotoCorp down 0.7%, and then you have the IT names, Tech Mahindra, Infosys in the red, LTI Mindtree as well, down about 0.5%. Reliance ahead of its numbers on Friday is just gravitating around that 2,800 mark, and TCS, Britannia, Tata Steel are also under a bit of pressure. What's looking good? Bajaj Finserv is up about 0.5%. You have Bharti Airtel, that's up almost 0.3%. JSW Steel, ONGC, Tata Consumer Products, Power Grid, HDFC Life and M&M are a couple of other stocks that are trending in the green. The mid-cap index is actually having not a bad day, so it's up about 110 points, slightly outperforming the frontliners, so that's, I guess, a good thing. The market breadth is also not bad at all. 1,200 stocks on the advancing side. So let me hand it over to Nigel to give us the rest of the update. It's flat for the frontliners, but there is some action in the broader market.
Well, that's right, Sonia. Big action, actually. Just take a look at a few stocks out there. You had PNC Infra, their divested stake in 12 road assets for an enterprise value of 9,000 crores. That stock is up and about in today's trading session. You have Nalco, they have the JV that they are part of, and Argentina's Cambian SE. They have signed an agreement for lithium exploration and mining. So first they'll have to explore, hopefully they find something, then they can mine. But the companies that are part of that particular consortium, which is Kabil, is Nalco as well as Hindustan Copper. So both of them are higher in today's trading session. Tourism Finance, yesterday there was a large trade that took place. A large seller got out of the way. So that's why, in fact, that stock as well, after being up close to 20% yesterday, it's up another 6.5% in today's trading session. IRFC is up close to 7.5% as we speak. So that stock is doing very, very well. And to name a few more names, Geo Financial, little under the weather, I think, post those numbers that did come out. Landmark, well, they have delivered the highest ever quarterly pro forma revenues in Q3. The revenues are up close to around 8%, so that's a stock in focus. DCX Systems, one of the big movers in the last 1 year or so, but that one's a little bit under pressure because they're looking to raise a QIP at a discount to yesterday's close price. So the stock in the last 1 year or so is up close to 70%. In fact, it's opened up in the green despite that discount on the QIP. Maybe a sense that the QIP demand is quite strong. And Angel One, highest ever client addition in a quarter, up close to 16%. Profit as well, up close to around 14%. But as we saw yesterday, Angel One, Anand Rathi, there is this big theme that we're talking about. Financialization in the theme. Some of these stocks, maybe in fact, they've run a little bit ahead of themselves, at least going by the stock reactions that we're getting. Because Anand Rathi's numbers were very good. The stock was down 5%. Angel One as well, the numbers look pretty good. But that stock as well, down close to around 8% as we speak. Prashant.
No, absolutely. But, I saw some brokerage sort of notes on Angel One saying revenues are a bit of a miss compared to what the consensus expectation are. So we'll have to maybe speak with the company in a bit. But 35.50 is where Angel One is. That's a sharp cut. It's, of course, been the best performing broking stock out there. The market's recovering. I mean, we're down about 25 points on the index, but this is just the first episode of what will play out today through the course of today's session. And I'm certain that we will see more than, just this one move from the lows to the highs. I think we've got some more left here. 22,073 is where we find ourselves at. Just a few other names which are moving around. By the way, market breadth is still extremely positive. I was talking about public sector companies, right? Look at names like IRFC, 9% higher. IRDA, 3.5% higher. RVNL, 3.5% higher. Nalco, of course, Nigel has been pointing out, 4% in the green. Hindustan Copper is up 5%. Ircon is up 2%. Cochin Shipyard is up 2%. Mazgaon Dock is up 2%. This is PSCs, public sectors, sort of companies which are front and center once again. Others can come and go, which is Reliance and IT and Pharma, like we've seen over the last couple of days. But the one constant leader of this bull market has been PSUs, and there is no stopping there at all. Aster DM, Ekta was telling us about this one earlier as part of the top 10 list, 10% higher on Aster DM. Stocks at about 440 at this point in time. Dredging Corp, again, another PSU name, 6% or so at this stage. Yes Bank is coming up with about a 4% pop. Polycab went up 6% yesterday. Polycab is up another 2% this morning. So that is some of what is, coming through in terms of the trading session. So on the downside, I mean, I think, apart from what we already mentioned, which is Angel One, and I think Geo Finance, we also mentioned 4.5 lower. Look at Moti Sons. Moti Sons had a vertical rally after the recent listing. Yesterday, it pulled back 10%. It's down another 10% this morning. 8.5%. 197 on Moti Sons is what we have. And something like a RBZ Jewelers, right? Again, something which went up vertically last week. That's pulling back about 8% this morning as well. So yes, I mean, in the broader space, there is a lot of movement, which seems to be playing out.
You know, I also want to point out that the entire pharmaceutical space had gained quite a bit, right? Two spaces actually, not just pharmaceuticals, but even real estate. All of those stocks are coming off a little bit today. So just keep an eye out on that. Aurobindo Pharma is down, Alembic Pharma is down 1%. In real estate, by the way, Glenmark Pharma is also under pressure. And in real estate, all these names, Macrotech Developers, Oberoi Realty, Prestige Estates, Godrej are all under. Brigade is down about 0.5%. So I think the market, as the market starts to get a bit cautious, there is a little bit of money being taken off the table. Easy Trip, Motilal Oswal, Balkrishna Industries, Aisha Motors, Nykaa. Nykaa has been gaining a lot of ground, so some money being pulled off over there as well. So not looking great. Actually, the headline index is not reflecting the kind of pain we are seeing in the broader markets because so many stocks, Angel One down 8%, Geo Financial Services down 4%. So, you know, that's not looking good.
You know, Sonia, IRFC, the stock in the last 1 year is up 330%. The current market capitalization is 1.8 lakh crore, and it's entered the top 40 companies in terms of market cap. You know, it's the market cap is more than some of the Nifty companies now. So, you know, I think I don't know what to say. You know, at one point of time, maybe valuation-wise, it was in favor. But after the stock is up 350% and it's moving on these sort of volumes. You want to analyze these numbers a little bit more closely and, you know, and be a little careful.
I think it's completely bonkers, Nigel. I mean, you've got to say it, right? I mean, almost 2 lakh crores in market capitalization for IRFC. I mean, so, you know, just be very, very aware of what you're doing. I mean, if you're invested and, you know, don't take it. You know, stocks don't move up non-stop. I mean, sometimes they do, but then at extremes, I mean, it is better to be careful here with names like IRFC.
And then the government owns 87% also. Yes, we're putting caution on board. The government will say, hey, let's take some money off the table. You know, sell.
Good for the government, but I mean, the point is, you know, if you're a small shareholder,
then you better be careful.
You got to be, you got to put caution on the table here. With many, actually, not just IRFC, I would say many of these names which are moving up. Like the way they have in the PSU space. Gautam Trivedi is with us. He's co-founder and managing partner, Nepean Capital. Gautam, good to have you with us here. Good morning. Thanks very much.
Good morning. How are you?
You know, why don't we kick off with just a comment on names like IRFC and some of the others in that space, which are now, as we were discussing earlier, more valuable than some of the Nifty companies. What's the thought process here?
Yeah, I think the fact is that at this point, a lot of these NBFCs, including IRFC, I think have started to look attractive. They haven't really done that much. I mean, the entire BFSI space really has been a laggard over the last 12 months. So I think I don't have a view specifically on IRFC, but I think that's the view on the NBFC and the BFSI space.
Interesting, because we were saying maybe it's done a little too much, especially IRFC with almost a 2 lakh crore market cap tag now. But I think your comment is broadly on the NBFC space, right?
That's right.
Okay. How are markets looking, Gautam, themselves? Again, I mean, you know, we had a 2-week break and then right back, 400, 450 points in 2 sessions on the Nifty. How are we looking near term?
I think near term is still very strong. The fund flow from domestic retail investors who are obviously a lot of them are first-time investors, has been just unabated. You saw December taking in over 17,000 crores in SIPs alone. So I think that momentum from domestic investors is not going to slow down. I don't see any real cause that will make it slow down. And if you then look at the impact it's having on our weightage in the MSCI Emerging Market Index. So we've gone over the last 8 years from 7% to over 17% now. And as a result, if you notice until I'd say about the last quarter of calendar 23, the FPI flows actually weren't really doing much. But as our weight in the MSCI started going up, you know, the ETFs and passive funds have to match that. So as a result, it becomes, in some sense, a self-fulfilling prophecy where money's attracting money. And until we don't see a significant slowdown in domestic flows, and I really, between now and the elections, unless something, a major calamity happens overseas, I don't see that slowing down. So I think the momentum should continue, and FIs will lead domestic flows.
All right, the momentum should continue. There are some stocks that are bucking the trend this morning, actually. Aster DM is up 10%, so don't lose sight of that. We were talking about it earlier on the show as well. Volumes are picking up on Aster DM. Yes Bank is coming back, up almost 4% over there. And a couple of these stocks, Polycab, by the way, look at the pullback in Polycab, up 3% now. In fact, I think the low that Polycab saw was somewhere around 3,900 or 3,800, if I'm not wrong. If you just pull up a one-month chart, around 4,000 or so, and now it's back to 4,300. So there's some amount of pullback that we're seeing in Polycab. Controversy or no controversy, this is a stock that has always been a favorite. Gautam, hi. Thank you for joining us. I wanted your thoughts on the mid-cap space, actually. Currently, the Nifty PE is about 20 times forward, but the mid-cap PE, the Nifty mid-cap PE is about 28 times. So given the kind of valuation discomfort that there is in mid-caps, do you think that one should be a bit cautious? And even if you're taking profits out, it's better to do it now in the mid-caps rather than the large caps?
I agree. I think the fact is the mid-cap, and even, we aren't even discussing small caps. I'm sure that PE is even worse, or even higher. But the fact is that I think it's time to probably be a little more careful on incrementally putting new money in small and mid caps, because they've rallied so much. In fact, we ran a screen only last week, and this is about almost 1,150 stocks. And we found 784 stocks have gone up 50% or more since their own respective 52-week lows. So that's been the kind of mania that we've seen in mid and small caps. And again, this is across market caps, but mid and small caps in particular. And if you look at the large caps, Sonia, I think your point's very valid. If you look at the large caps, and if you look at some of the stocks that haven't really moved, and you're looking at Reliance, you're looking at a whole bunch of companies, TCS, Infosys, HDFC Bank, etc., they collectively account for almost 50% of the Nifty 50. And their average return in 2023, a calendar year, was a mere 9.5%. So is now a good time to actually think of putting money and playing safe with large caps? The answer is yes.
Hi, Gautam. Good morning. Nigel on this side. Gautam, last year when we briefly chatted, I think in the last quarter, you were telling us that Infosys is not looking so bad at those valuations. It was an underperformer. But clearly these results, the street has got fairly excited on IT. How are you all positioned on the tech space? And would you all play large cap IT or mid cap IT? Because if IT seems to be turning around, we're going to be getting rate cuts and maybe things are not as bad, then the higher delta may come in from the mid cap space. Tell us your view.
Yeah, so I think now is a good time to get back into IT if you've not been in it. So you haven't really missed anything significant over the past about 18 months or so. And if you look at even the post-results sell-side research that's been coming out on the four big ones that have announced so far, i.e. TCS, Infosys, HCL, and Wipro, a lot of these companies are now trading at, so Infosys, for example, a note that I saw for FY26 is now 18 times. TCS is still very expensive with respect versus Infosys. But I think valuation comfort is certainly coming back. We're looking at FY24 most likely ending with a high single-digit earnings growth, but 25 and 26 projections are now going to 12, 13, 14% earnings growth. So I think, now would be a good time to get back into IT.
All right, good time to get back into IT. The stocks, in any case, have been surging quite a bit. Numbers have not been that great, but I guess valuations are looking good. Thanks a lot for joining in. Appreciate your thoughts here, Gautam. Well, for the market, it's not too bad, to be honest. Down just about 30 odd points, kind of consolidating around these 22,000 levels. Let's get you another top corporate voice from Davos 2024. Amitabh Chaudhry, the MD and CEO of Axis Bank, expects credit growth to temper down going forward. He was in a conversation with Shireen on the sidelines of the annual World Economic Forum. He adds that cybersecurity has to be one of the top concerns for the banks. Listen in.
Well, if you read what Governor has been saying, it's very clearly RBI is worried about some of the exuberance they're seeing on the credit growth side, especially on the retail loans, and specifically on the unsecured loans. I think by increasing the risk weightages, they're giving a clear signal that they do want the market to temper down their growth, to watch for credit risks out there, which maybe they're not watching as closely, and also look at the leverage of some of the borrowers who are being lent money, especially by some of the smaller players in the system, including fintechs. I think the message goes on further to say that we are watching this space. It's not ended here. If we do not see this trend being reversed, we will do something more. What that more would be, RBI has many tools, and what they decide to do only time will tell. At some stage, the deposit growth and the credit growth has to converge. The deposit growth is muted because RBI is tightening the liquidity. That is not going to go away till inflation is, comes under control. So if RBI is not going to give up on tightening our liquidity, and deposit growth is not going to pick up to the extent we want, the credit growth at some stage has to come down. They have to converge. It can't be too, credit growth just running ahead of deposit growth. So in that sense, I think they're just saying it openly and clearly that this is what they want the market to, how to behave. I think they have also started asking questions on the credit deposit ratio side. Now, every bank has its own context and what their deposit franchise is. For example, in case of Axis, we worked very hard over the last 2 years to, decrease our outflow rates by 550 basis points because we restructured our balance sheet in a particular way. Now, that could mean that our credit deposit ratio is slightly higher than some of the others. But we have done something very well on the, ensuring that there is enough liquidity which we have as a bank. And today we are one of the best in class in terms of outflows. So I think RBI recognizes that every bank has its own context, and I think they will react and look at the credit deposit ratio with that context in mind. We have an extremely smart regulator, very proactive regulator. I'm sure they're listening, and hopefully some of these things will converge at some point. But I do expect the advances growth to temper a little bit from here. They're not going to continue at the same pace. I don't think RBI will allow it.
But let me pick up on both those issues. On the credit deposit ratio, you said that the regulator is being watchful at this point in time and will act if necessary. But you're also hopeful that they will keep in mind the context of each individual bank. If that were not to be the case, what would somebody like you, for instance, need to do to ensure that the regulator is not forced to act?
Well, the math shows that if the regulator wants the credit deposit ratio at a certain level, and you can do it for every bank, what it means in terms of additional deposits they have to raise to get to a targeted deposit ratio, and then if they want to grow from there, what additional deposits they need. It's just pure maths. So I think if RBI was to move towards mandating a number for all the banks or a number for a bank, and a different number for different banks, it would mean that everyone has to relook at their balance sheet and then act accordingly on the liabilities and the asset side. I think the regulator will, my view is, will never come out with a number. Right. I think they will guide us towards what they want. They will expect the board to look at some of these things and come up with a plan which will ensure that if things were to go in the wrong direction, automatically the mitigating mechanisms will take care of it and push either the asset growth down or increase the deposits you're collecting from the banking system.
So in light of what has already been said, and there isn't a mandate on a number just yet, but are you starting to approach things differently?
Well, we are looking at a balance sheet because obviously RBI is asking all the banks questions around how you're going to manage this going forward. I think a bank of our size, the kind of franchise we have, I think we can manage some of those variables much better in comparison to some of the other smaller institutions. So we are looking at all our options and seeing what we need to do. There might be some small changes on the increment, but otherwise we do believe that we can meet the expectations of RBI and meet the expectations of what our shareholders expect from us.
The buzzword here, of course, is AI, and of course, cybersecurity is a key concern for banks back home as well, including yours. On both those counts, what is the priority? What is going to be the strategy from here on, specifically for 2024?
So, as a well-known professor has said that Gen AI, everyone will look at Gen AI. The people who will benefit from Gen AI are the people who are creating the platform for Gen AI and the consultants who will allow you to, help you in using that platform. Because all of us are investing in Gen AI and looking at it very, very actively. All of us will get the benefit, but as all of us get the same benefit, customer, might gain from it, but in the sense, will it improve our balance sheet and our profitability? I doubt it. We have been looking at Gen AI for the last 12 months or so. We have actually launched a first Gen AI platform internally. It is not cheap. It is quite expensive. And it is for
How much money are we talking about?
It is decent sum of money because, it does not come cheap. And the way you get charged for it, it's, a simple question could mean you being charged for it multiple times. So, but our view is that no, we have to embrace it because it is a technology which is going to change the world. We have launched it for employees internally where they can ask questions of our platform of any product, service, process, etc. And right now the accuracy rates which are getting are pretty good. So we launched in about 100 branches. We are working on 8 or 9 other proof of concepts for GenAI, and I'm sure other banks and other institutions are doing the same. So it is going to be a game changer. My only view is depends on the pace at which you embrace it. If you do it at a very fast pace, and yeah, you will make some mistakes along the way, I think you'll get much bigger benefits. If you're just a follower, I don't think the benefits will be substantial because that will become almost essential for you to do business. You asked me about, what are we doing on some of the other stuff which is happening in the marketplace. Well, as a large institution, you have to spend on technology and expanding a franchise on a continuing basis. There is absolutely no option whatsoever. And that means that with, for example, cybersecurity added to it, it's a further addition to your technology spend. I believe very strongly that as India becomes more and more relevant to the world, and as India becomes more prosperous, we will start coming under the radar of all these people who are misusing this technology to hack into systems and gain some advantage. We are seeing some, obviously early trends. I think you'll see more. So whatever you can spend might not be enough, and you obviously have to keep spending to ensure that you are slightly ahead of the curve. It's not only that. Third is that the frauds in India, digital frauds in India are also rising exponentially. And please understand and appreciate that while we can have a large team which is monitoring it, the people who are involved in digital frauds are doing nothing else, day in, day out, but just trying to find, issues and bugs in your system. So you literally sometimes have to hope that the number of bugs or the kind of firewalls you have put are much better than someone else, so they're going to attack someone else rather than you.
Is this your top concern today?
No, it is. It has to be a top concern for every large institution in India, especially, say, a bank, because cybersecurity, digital frauds not only has an impact on the reputation of the firm, but the customers who go through digital frauds become complete naysayers because they believe somewhere that the institution could have done something to stop them from falling for the digital fraud. So no, it is, if you were to ask me one of the big concerns, it is one of the big concerns.
Okay, very important conversation there. You'll hear it through the course of the day. For now, let's slip into a quick break. On the other side of the break, Kesoram Industries is in focus. P. Radhakrishnan of the company will be joining in to talk about their Q3 earnings. Later in our quarter se quarter tak segment, Sonal will put focus on the oil and gas sector ahead of the Q3 earnings. Also, Harshvardhan Dole of IIFL will discuss his expectations from the sector. Stay tuned.
Welcome back. Well, let's get to Kesoram Industries. That's a stock on our radar. The quarter 3 numbers a little bit subdued on the back of a dip in the top line. The margins were expanded. EBITDA is up close to around 25% on a year-on-year basis. So Mr. Radhakrishnan, the whole-time director and CEO of Kesoram Industries, joins us on the show. Hi, Mr. Radhakrishnan. Good morning, and thanks so much for joining in. Well, one question that we'll avoid this time is Kesoram on the block? Because that deal got finished, right? So that's pretty good news. So the investors as well will be looking at the way ahead from here on. Give us a few more details, sir. On the top line, there's a dip. Is there a dip in volumes? If yes, what were the volumes in the past quarter? And earlier you were talking about 8 million tons for the year. Is that still doable, or do you want to revise that number? Focus on volumes first.
Good morning, Nigel. So sequentially, there has been a dip in the volume. We did 1.96 million in the Q2. And we did about 1.76 million in Q3. Yes, there has been a sequential dip in the volume. So our volume, which we should do for the whole year should be little bit short of 8, maybe 7.6 to 7.7 is what we will be targeting to do from here on.
Okay. All right. 7.6, 7.7. Yeah, because otherwise, if you have to reach 8 million tons, I think you'll have to do a 25, 26% growth in Q4, which doesn't look very, very likely. So good, you're being more realistic on that front. What about the EBITDA per ton? It's hovering around that 600 rupees odd as per your calculations, because I think you pull in the other income as well out there. But could you tell us what is a sustainable number? Is there scope for improvement for Q4? I think you were guiding earlier for around 625 to 650.
So we'll be in line with 625 to 650. That's where we will be.
Got it. All right. Since we're focusing on the cement business itself, what has been the price increase in Q4 so far in comparison to Q3? Has there been any price increase? The reason I ask you is normally post Pongal, you see a price increase that's pushed through in South India, which is one of your focus markets. So how have prices changed, say in the last 20, 25 days or so?
Not substantially.
Okay. More or less
substantially.
Okay.
All right. Mr. Radhakrishnan, good morning and thanks for being with us. Just a couple of more questions on the balance sheet. What is the debt on the books currently? Have you been able to bring down your debt in any way? And what is the scope of reducing debt in the next 1 year?
So 1,800 is the debt on the books. So
Okay.
Nigel has skipped his favorite question when we are going to do the refinancing this time, right? Hopefully we will do the refinancing this quarter.
No, but Nigel also wants to know that if it's 1,800 crores, you've done that deal with UltraTech Cement, how much of this, all of it will go, right, with the cement deal that you've done? So you'll have a debt-free balance sheet, Kesoram Industries, whatever is remaining, right?
Yeah, the subsidiary will have a 200 crore of debt. That's where it is. Kesoram will be debt-free.
Okay, but what happens then? What is remaining in the business? That's a good deal that you'll have, tied up with UltraTech Cement. But what is remaining of the business? I think it's just that Rayon business. So could you tell us, how do you see this business shaping up? In the first 9 months, you've done around 180 crores. You're still a bit lost for the 9 months, though for the past quarter, you almost moved into the black. So how does this business shaping up? Because I guess this is all that's left now.
So Rayon and transparent paper business has got good potential. But for it, it requires some infusion of equity into the business. Debt beyond 200 should not go from where it is. So if some equity, as we have conversed in the past, the tie-up with Futumura and the transparent paper, there is a lot of global demand. If we scale up on the technology, both for the transparent paper as well as the Rayon, there is a good potential for a sustainable EBITDA of 60 crores. That's where I look at this business.
Okay. Your total capacity is currently a little under 11 million tons per annum. Just trying to understand, what could the scale up be over the next 1 to 2 years in the capacity?
You're speaking about the cement business?
Yes.
Yes, the cement capacity.
Pardon?
The cement capacity. Can you just give us an outline on what the cement capacity could be over the next 1 to 2 years?
We can add one more kiln there. That's where it is. We got sufficient limestone, and one more kiln could be added in our Karnataka location plant. That's what I can say at this juncture.
Mr. Radhakrishnan, what Sonia meant is, we know that business is going to go out of your books, but you have been running the business for the last many years. So currently the total capacity is around 10.75 million tons on, but it has adequate limestone reserves. So as per you, what can this number scale to, as per you, and also what could be the rough capex that you'll have to incur to scale up to that number? It'll go into better hands, in the coming months, but according to you, what is it?
So about one more kiln can be added at a cost of about 1,500 crores, quick ballpark, right? That's the way I look at it.
So one more kiln can add how much capacity?
So about 1 to 1.5 million tons you can add there.
Okay.
So you can go to 12.5 million tons is what you're saying, right?
Yeah. 1 to 1.5. Yeah.
1 to 1.5, and it'll come at a cost of 1,500 crores capex.
Correct.
Okay. Can you just give us a little more details on what the price increase has been in certain markets? What was it in South? I mean, you spoke about it briefly, but going forward as well, do you see scope of more prices being increased? And if yes, what could the quantum be?
As Nigel observed, normally there is a uptick on the prices post Sankranti, which is yet to kick in. Say 5 rupees, 10 rupees here and there had been an increase. But prices have to move up further for our margins to expand. That's where we are.
Okay. And and when do you see this deal get completed, the cement deal?
So various regulatory approvals are required. So it may take anywhere between. It's tough to speculate at this stage. Probably when we meet next time, we will have a clear.
Yeah, I think every meeting things are getting more and more clear. But final question before we let you go, you said that the EBITDA, sustainable EBITDA number from the rayon business, which you believe has great potential, is around 60 crores. So
Yes.
for FY25, you're assuming the rayon business has an EBITDA of 60 crores. Is that correct?
I would we have to sit with the CEO of the business on the drawing board. My quick ballpark is basically 60 crores is doable. There are some refurbishment and expenditure needs to be incurred to bring up to the 60 crores. So we need to sit with the CEO. Probably I'll come back to you on this.
All right. Thanks a lot for joining in and appreciate your thoughts here. That's Kesoram Industries. In the last 6 months, it's been a super performance that the stock has seen, 140% higher. Today, it's just slightly subdued. It's time for our special segment now, Quarter Se Quarter Tak, where we bring you expectations from each sector. Today, Sonal will tell us how the Q3 performance could be for the oil and gas sector. Over to you, Sonal.
Well, it's going to be largely a sequential decline in the oil and gas sector in Q3. Remember, Q2 was strong for a lot of companies. But let's start with the macros first. Brent prices, they averaged at $83.7 a barrel, which was a decline of 3.5% sequentially. Singapore GRMs also declined quarter on quarter to come in at $5.6 a barrel. Now, how would all of this impact stocks? Let's start with Reliance Industries. Here, the EBITDA is expected to increase YoY by 17%, but it will be flat on a sequential basis. O2C segment would see a decline due to declining GRMs, but it would be offset by strong performance in the retail segment. Now, on to the oil marketing companies, where we will see a big decline on a quarter-on-quarter basis in EBITDA because of higher base. Lower refining and marketing margins will put pressure on earnings. Additionally, Russian crude discount also declined in the quarter. So OMCs could see a decline of 70 to 80% in EBITDA on a quarter-on-quarter basis. GRMs, they are expected to be between $8.5 to $11.7 per barrel, with BPCL topping this list. Now for upstream companies, despite the windfall taxes, decline in crude prices as well, their adjusted realizations have sustained at $75 a barrel mark. And for ONGC, crude output is expected to decline by 2%, while for Oil India, it is expected to increase by 7%. EBITDA, however, will see a decline of 14% for both the companies on a quarter-on-quarter basis. Now, city gas distribution companies, they've seen a decline in LNG prices in Q3, but there has been a hit on volumes as well. So for Gujarat Gas and IGL, only a 2% increase is expected, and for MGL, it is expected to be only 1%. This is for volumes. EBITDA per unit is expected to be flat for IGL and Gujarat Gas, and it will be a decline for MGL on a high base. Now for gas utilities, it will be largely lower as well. GAIL's PAT is expected to decline by 16%. For Petronet LNG, it is expected to be a 3% decline QOQ, and for GSPL, EBITDA is expected to decline by 7% on a sequential basis. Let's talk about valuations now. Oil and gas space continues to be reasonable despite a big run-up seen in some of these stocks. Reliance Industries is trading at 21.4 times. Of course, it does have a lot of businesses. ONGC in Oil India is between 4.5 to 6.1 times. OMCs are trading between 5 to 8 times, with IOC topping that list. For city gas companies, Gujarat Gas continues to be the most expensive, followed by IGL, and then there's MGL. The gas utilities are trading anywhere between 11 to 17 times. This is one-year forward earnings.
Okay, all right. Thanks a lot for that, Sonal. Well, we'll get Manisha to join in just a bit to focus on the commodity markets. By the way, plenty of stocks are moving around, and the Nifty, from being down close to around 50 points odd, that dip has got walloped into actually. You have stocks like Bajaj Finance. Yesterday, there was some short positioning on that stock. That's seeing a bit of a bounce in today's trading session, currently moving to the high point of the day. Britannia as well is moving up, so that's pretty good news. And the reason the Nifty has almost moved back into the green is because the Nifty Bank has seen a big recovery. So you pull up the intraday chart of the Nifty Bank. Now it's up closer around 40 points. Courtesy ICICI Bank, that's the one that's moved higher, and Axis Bank as well. But as promised, let's get to Manisha. She's standing by to tell us what's transpiring in the commodities market. Manisha?
Well, thank you for that. The commodity that I'm watching out for is zinc, and we have seen the prices gain up in the overnight market. It's trading at a 2-week highs right now. So even as other metals are not performing as much, but for zinc, it really is about the individual fundamentals is the reason we saw the prices gain up by nearly 2% overnight, and we are just holding about those kind of gains right now. So flat trades happening for the Indian markets as well. But this is happening after Nyrstar came out with a statement saying that they are suspending zinc smelting at the Dutch plant. Now, this plant has an annual capacity of around 315,000 tons per year, and Nyrstar says that they are putting this in maintenance until now because it's not garnering any profits for them. Well, remember, Nyrstar also had suspended 2 mining facilities in the month of November, also suggesting that it wasn't working out for them in sense of margins there. Now, this is being done because there are higher energy costs. Zinc is already in surplus right now, and these are difficult market conditions, and winters in any case is a period where you have weak seasonal demand coming in. Markets also have seen pressure continuing because of the strength in US dollar. The Chinese central bank meeting that happened yesterday left the rates unchanged. Also, the inventory surplus that seems to be building is expected to continue into this year as well, as per various reports. So if you look at the LME inventories itself, they are at around 2-year highs. And the International Lead and Zinc Study Group says that they have seen inventories at a surplus of 489,000 tons. This is over and above the buildup of what we saw in 2022 as well, at around 156,000 tons. So we have seen last couple of years continue to add more inventories in case of zinc, and this year would not be any different, and you could be looking at higher inventories. We're also already looking at them at a 2-year highs, and that's weighing onto the markets there. If you look at the prices in this year until now, we've seen zinc prices decline by 3% for 2024. This comes in on the back of decline of 14% last year and 16% the year before as well. So back-to-back 2 years of decline, and this year has started on a negative note here. But the outlook as well seems to be stabilizing. Markets do believe that as and when the Chinese demand comes back, and if you see more smelting capacities being shut, that could really give support to the prices. Currently, we're trading at around $2,500, and that is where Fitch, even Capital Economics of Bank of America believe that you could be looking at zinc prices averaging at. A bearish view, of course, coming in from BMI, which believes that the prices could decline further to 2150. That would be very close to cost of production, and that could perhaps be a bottom as well.
All right, thanks a lot for that. Well, getting back to the oil and gas space now, Harshvardhan Dole, Senior Vice President, Institutional Equities at IIFL, joins us to tell us what he expects from the oil and gas sector in Q3. Harsh, thanks a lot for joining in. First, if you can give us your overarching view on what to expect from the sector, and then what are your top picks in the sector this quarter as well?
Sure, thanks. See, I think relative to last year as well as the second quarter, the macro environment was less benign. For example, the GRMs have kind of weakened, and at the same time there has been moderation in the marketing margin. So that will definitely be high on the earnings of the sector, both downstream as well as upstream. I think the positive way to look at it is with respect to what had happened last year, the numbers will actually fare out phenomenally well for particularly the downstream companies. So if I were to take a holistic view, while the numbers may seem to be quite disappointing on a sequential basis, I think given lower base versus what these companies have been going through, I think the performance should be quite impressive if you evaluate on a standalone basis. On the same thread, I think the city gas distribution companies like IGL and Gujarat Gas will actually report reasonably good quarters. I'm not too sure about some of the other companies who are actually sitting on a very high base of margin. But in general, for CGD, volume should be quite reasonable, and there should be uptick in the margins. So the gas companies actually stand out very well in the third quarter. Reliance is basically a very peculiar case whereby the O2C business is likely to be weaker, but that will be more than offset by strength in the E&P as well as the B2C segment.
Okay, I wanted to talk a little more about Reliance actually, because the stock in the last 1 month has gone up 10%, and you're expecting it to be a flattish quarter this time around. But do you think that the consumer businesses, which have been growing at a very steady clip, right, both Jio as well as the retail space, do you think they could continue to gain traction, assuming more importance in the numbers this time and perhaps giving it that incremental upside?
Well, that's what we are hoping, that festive season should have gone reasonably well for them. And there are traction in the subscriber additions as well, for which both Jio and retail should continue to deliver the way we are forecasting. On a sequential basis, we are, for example, retail, trying to pen in something like 3 to 5% on a sequential growth, which assumes linearity in terms of sale and flattish margin profile. So hypothetically, if the operating leverage kicks in, there is a good chance for an upside surprise, which is what we'll keenly await.
Okay, a good chance for an upside in Reliance, which is what you're looking at. All right, gas utility companies, a quick word on that. GAIL, Petronet LNG, I think you mentioned it briefly, but you think that the margins would normalize this time around? What are you expecting in terms of the operational performance, and what can we look forward to on the stocks?
So GAIL in particular is not a simple direct play on LNG because it has got quite a few moving parts. The core business, which is the natural gas transmission, will do quite steady with 3 to 4% volume growth and benefits of tariff revision. Where we are unsure about is the commodity business, the petrochemical business, because the margins have actually come off the cliff. Even on the sequential as well as YO basis, margins are down in double digits. So we are hoping that the company is able to source gas at a much competitive price and throw some surprises. Otherwise, the much of the weight lifting will be done by the energy trading business, where GAIL has constantly been surprising the street, and which has been the sole reason for the earnings upgrade.
Okay, that's on GAIL. Yeah, go ahead. Petronet LNG, you were saying?
Petronet LNG, again, it's, as of now, just 2 terminals operating. And I think the benefits of lower natural gas prices should start accruing to them, which is reflected in the terminal utilization. And therefore, the earnings that we are forecasting are, close to about 4% on a sequential basis, which to me is quite reasonable.
Okay, finally, a word on these standalone refiners like MRPL. Do you expect a hit on their profitability as well because of the lower GRMs that we are seeing quarter on quarter?
Of course, there will be an impact on the margin profile of the standalone refiners. And given the fact that their earnings are very sensitive to the underlying GRMs, there will be volatility in their earnings. And that is the reason why, as a house, we've always believed that the best way to play the whole refinery theme is by owning the integrated players like HP, BP, and IO, which actually remain our preferred picks in the sector.
Okay, Harsh, we'll leave it there. Thank you very much for joining us and running us through your expectations for the quarter from the oil and gas space. Thanks indeed. The market's picked up pace quite a bit. We're down just about 8 points. I think we have maybe the rates on Jyoti CNC coming through the new listing in just a bit from now. I think in the pre-open, it has ended about 11 or 12% higher. There you go. We'll have the listing at 10 a.m. and then the management will be with us to talk through the numbers. Angel One is down a full 11.5% now. Stocks at about 34.46. I mean, the losers list is pretty much similar from where we started, of course, with new names now. But Moti Sons is down about 8%. There is Nykaa, which is down about 2% or so. Syngene, some of these names were not there in the mix earlier. Syngene is down about 2.5%. And there are others, Capicite, Infra, and Avanti Feed, etc., which are also taking a bit of a knock. I think Nagaraj Shetty is with us of HDFC Securities to run us through what he's making of the trade so far. Down and then back up, absolutely flat now. Nagaraj, what would you do?
Yeah, of course, the short-term trend of the Nifty remains positive. We have seen sharp upside breakout in the last 2 sessions, and Nifty is currently showing consolidation. I'm not expecting any bigger decline from here. Any consolidations is going to be a buy and dips opportunity. I remain with the upside target for the Nifty is around 22,200 to 23,300 levels, where the couple of resistances converge, Fibonacci extensions converge at the higher levels, and at the lower levels. 21,950, 22,000 is going to be the support for the Nifty in the next one or 2 sessions.
Okay. Well, I just wanted your thoughts on a couple of these stocks that could be in focus as well. HDFC Bank, of course, I mean, you may not want to comment on it, but nevertheless, I'll ask you about it anyway. Particularly for banks, how is the situation looking? HDFC Bank's numbers are today. There's ICICI Bank later in the week. Do you see traction picking up here, or are you cautious?
Yeah, of course, Bank Nifty has witnessed a sharp upside bounce from the 47,000 levels and currently showing consolidation. The overall chart pattern is looking positive, which is suggesting a possibility of decisive upside breakout from here. I'm expecting Bank Nifty to move further, even as well as the large cap banks to move further from here.
Okay, that's on large cap banks. Any other stocks that you're looking at? Because there's some profit taking that you're seeing in some of these technology names. Of course, they've been the big gainers in the last couple of weeks. By the way, that's Jyoti CNC. Just look at that, 14% higher. Very, very strong listing coming through for that company. So we'll get talking to the management as well in a while from now. As of now, let's let them enjoy their moment in the sun, the listing of their company. Very, very big move coming in. Their volumes also picking up on Jyoti CNC. It was expected to be a strong listing, and there you have it, 17% higher. Before we let you go, a quick word, Nagraj, on the IT stocks. Anything that you still like there?
Yeah, IT, Infosys and TCS are looking positive. What we have seen a sharp upside bounce in the IT sector, as well as currently the showing minor consolidation. Over the period of time, this Infosys and ITC are chartically looking very positive. They are placed at the hurdles. I'm expecting this upside momentum to continue for near term.
All right, we'll let you go on that note. Thanks a lot for joining in. We'll take a quick break. On the other side, the Dalal Street debutant, Jyoti CNC, will be with us. Param Krishna Jadeja, who's the chairman and managing director of the company, will be on our show.
Welcome back. Mr. Parakram Singh Jadeja is Chairman and Managing Director at Jyoti CNC. That is the latest sort of company to make its D Street debut, and it's a fantastic debut. Mr. Jadeja, good morning. Great to have you with us here on CNBC-TV18. Prashant this side. And congratulations on what is absolutely a great listing. Now now that you are in the market, you're in the listed space.
And thank you very much.
Good to have you with us here, sir. Now that you're in the listed space, I mean, you'll be able to talk more freely about what your ambitions are and quantify them, sir. I was just looking at what you've done in FY23 in terms of revenues and what you've done in the first half of FY24. If one annualizes the first half numbers, we're basically looking at about a 10%, little over a 10% growth in FY24. First, sir, could you tell us if that is the broad number in terms of growth, both in 24 and more importantly in 25? Should we expect any acceleration here? And second, on margins, where we've seen a substantial improvement to about 14.5%, what's the steady run rate margin which we should expect into FY25 as well? Go on, sir.
So, thank you very much to you and all of our new set of investors. The way the people have put up a faith on us and on the vision, I'd like to say thanks to, first of all, to all of you there. And in terms of, let's say, the growth trajectory, let's say what you look in last 3 years, and now the beginning is, let's say, we have a very robust order book, and the way we are going to be execution commitments are like that. We're looking to be furthermore in terms of a revenue growth, as well as margins also to be there. Basically, margins will going to be improved basically based on the today's our capacity utilization will improve from 50% to this a little bit higher number in 24 and in 25 itself also there.
So, so if you could put some numbers to it, sir. You said both will improve. So steady state revenue growth, what should we expect? Around the 15%
so basically, I'm
number?
today on a cooling. I'm right now. Absolutely right. I'm right now in a cooling zone, and in the next 3 weeks, you will see the numbers, and that will make you very positively impact and positively happiness to be there to all of you there.
All right, Mr. Jadeja, good morning and congratulations
very soon you will
on the
see
listing.
the numbers there.
Sure. If you can tell us, more than 60% of your business comes from two verticals, right? Autos and the aerospace division. Just trying to understand what is the scope of growth in both these spaces, and can you just to get back to the operational performance? Is there scope, since both these spaces are growing in a big way? Is there scope to increase your operational performance much more from here? I mean, you're almost sitting at 15% margins. Do you think you have such any more operating leverage to build on to these?
Absolutely. Today, our let's say the utilization level at close to 50%, and the plant has capacity to be close to 4,400 machines, and there is a room to increase with the minimum bottleneck removal going to reach out to be a 6,000 machine in next 1 year time over there without spending much on a capex, and then that's all this capacity utilization will come. So all this kind of utilization will come. Definitely, this margin also will be improved, and in terms of top line also will be improved.
And in the defense space and the aerospace division, can you tell us what is the order book right now by the end of the first half of the year or Q3? What is the order book, and what is the kind of order visibility that you have over the next 1 year?
Yeah, so basically today out of this 3,300 crores of our order book, the 1,900 crores order plus orders are basically from the aerospace and defense. And multifold we are looking in this order book in the next coming quarter to be there. There is a big pipelines we are seeing. All the way the words are moving towards to more and more on modernization, on digitization, all like that. And in aerospace and defense, and now upcoming market also in India called as the EMS. That's also we are growing. We are looking to be a further more growth to be there.
Okay, all right. Hi, Mr. Jadeja. Congratulations on a solid listing. But now, in fact, the responsibility is on you to deliver some good numbers to justify this. So let's focus on a couple of aspects. As you said, you're in a cooling off period. But I want to understand, with the current capacity that you have, what is the peak revenue potential? You know, I'm just doing a back of an envelope calculation. It suggests it could be around 1,350 to 1,400 crores. You could clarify on that, the peak revenue potential. And also, since you can do some debottlenecking and increase the number of units from 4,500 to 6,000 units, what is the capex that you'll have to incur for that?
So basically, it's to reach out from the plant as such a way is built. So from 4,400 to 6,000 machine, there is not much capex are required. My teams we are working on that. It's a very minimal capex are required, not much over there, and we are going to reach to close to a 6,000 machine based on 25 numbers there. And in terms of let's say the total revenue size, okay, the plant can generate, okay, once we reach out to total model mix and capacity, we'll reach out to be close to 2,500 to 3,000 crores of a capacity to be there.
At 6,000 units, you can do around 2,500 to 3,000 crores. That's the peak potential, right?
Yeah, that's the peak potential.
Once you come out of this cooling period, sir, we like more details from you, but we appreciate you joining in, Mr. Jadeja, and giving us all the details that you did tell us. Wishing you all the best and enjoy the day. It's been a good listing. For the time being, though, we'll slip into a short break. On the other side, our special segment, It's the Economy. Lata will connect with Samiram Chakravarti of Citi India, as well as A. Prasanna of ISEC, to decode whether the RBI changed its stance post the December CPI numbers.
The December inflation in India is proving to be something of a dovish pivot for the markets. Bond prices and the rupee touched multi-month highs yesterday in intraday trades. So why was the data special? The December CPI at 5.69% was way below market estimates, but more important, below RBI's forecast. So if inflation is going to undershoot, will RBI change its stance? Will it loosen liquidity at some point? At least two entities, City India and ISEC PD believe, yes, Reserve Bank may change its stance as early as February. And today I have both those economists with me as my guests, Samiran Chakravarti of City India and A. Prasanna of ISEC PD. Gentlemen, good morning and thank you very much for your time. Samiran, you first. What's so special about the December CPI?
So, Lata, what's happening is that we are seeing two parts of the inflation basket which are moderating. One part is obviously core. Not only is the momentum in core inflation much weaker, but it's also extremely broad-based. So just to give you a sense of numbers here, out of the 24 different categories of core items, 20 of them are showing less than 4% inflation. And the other factor which is important is that the non-vegetable food prices are also coming off quite sharply. This is one component which post-COVID has never fallen below 5%. So that has been the most persistent inflation that has stayed in the system. Now that is also correcting. So all put together, we think that for the Jan-March quarter, there is about a 60 basis point of forecast revision possible by RBI from its current estimate of 5.2%. We are at 4.6%. So that's quite a substantial drop in inflation, which might make the MPC think differently about their trajectory going forward.
Okay, fair point. Prasanna, your report also very strongly argued that there's something special about the December CPI data. Optically, for me, I mean, the CNBC-TV18 poll was 5.9 and the number came in at 5.69. 21 basis is not something we celebrate so much. Yes, it's important. But what did you find in the details that was convincing?
No, I think the story was or continues to be core inflation, I think, as Samiran pointed out. So, and that's been a continuing story for quite a few months this financial year, even as the headline inflation turned quite volatile. But I think even outside of core, when you look at food, and again, when you kind of differentiate within the food basket between the sticky items and the volatile items like vegetables and all, I think there is a clear sense that some of the more sticky items are also kind of decelerating. Like cereals, for example. And we know that anyway, seasonally, I think vegetables are entering a phase where anyway prices are going to come down. So I think that worries over food inflation, which was there earlier, and there are other indicators like Rabi sowing, global food prices, and if you look at crude prices also. So broadly, I think the outlook looks favorable, and we are entering a period where anyway food inflation will come down and core inflation has moved below 4%. And also, we shouldn't forget, I think growth is basically entering a phase where it's also slowing down. Now, obviously, 7.3%, what the NSO said, we don't think that's a right kind of estimate. It's going to be lower than that. But net-net, what we know is that first half of last fiscal year, growth was higher. Second half, it's decelerating. And probably going into next fiscal year, it may decelerate further. So if you put all that together, then clearly I think the inflation outlook, I mean, we have clearly seen the peaks in inflation. I think from now onwards, it's going to ease. And I think next year, what the RBI has forecast, I think earlier in their NPR, around 4.5% average, I think that looks quite credible now.
Okay, not just credible. Prasanna, Samiran has brought down his fourth quarter number to 4.6%. The Reserve Bank's number is 5.2, right? Are y'all also forecasting a lower, I mean, the undershoot is not December, but also into Jan, Feb, March?
Yeah, so for us, we have penciled it at 4.9 and not as low as what Samiran is saying. But clearly, I think the direction is very clear. Like it's going to be below what the RBI has estimated. And, and like I said, because seasonally, it's a quarter where food prices come down, I think we have to say the bias is towards the downside. So we can say 4.9 and probably there is a probability or there's a possibility it can be lower than that. But direction is important. I think it's going to undershoot RBI's estimate. And that kind of sets up the economy well in terms of inflation heading into the next financial year.
Okay. Samiran, the point that Prasanna touched about on growth, the other fear for Reserve Bank will be if aggregate demand, I mean, if growth is very strong. And, you know, the wealth effect from stock market gains, could also that be a worry which might keep the Reserve Bank from changing its liquidity and monetary policy stance?
So this is one of those sort of little bit of a puzzle that despite growth consistently surprising on the upside, we are seeing core inflation surprising on the downside. So part of this is some kind of well-known data issues like the housing inflation number appears to be too low. And in general, services inflation consistently moderating at a time when urban consumption has been very strong is a little bit of a challenge to explain. And maybe those things will be there in RBI's mind when they look at their overall policy. But the point also is that we had almost 4 years of average inflation at more than 6%. So we should not be celebrating one or two good prints also too fast. We have to be a bit patient on that front. So that's why in our base case, we think the RBI will change their stance only in the April policy and not in the February policy. But February policy could be a live policy in terms of a more heated debate on this issue.
Liquidity. If the Reserve Bank was convinced of this argument, it would be more generous with liquidity, right? Prasanna, yes, they have done a couple of repos and given money to the market. But that was also because the market was unusually in deficit. I mean, December 31st, end of the month, normally you see the deficit reducing. This time it was higher, and therefore, at least I thought that is why the RBI is giving money. It has not moved the market into even, closer to surplus or even balance. So are you convinced that the Reserve Bank is convinced?
Well, I think the system was in deficit even before December also. We saw deficit for weeks together. We saw deficits in November and even in the first half of December. I think you should remember that RBI gave this repo operation after the FOMC meeting. Now, I'm not saying they just followed FOMC and Powell's comments on rate cuts, but surely it's not a coincidence. So I think the easing of global financial conditions also played a role in RBI changing its mind. And the way I look at it, they were doing 7-day or fine-tuning operations. But I think in the last round, I think they've announced the 13-day, which is basically a 14-day operation, which is their main operation. Since they've moved to repo provision using the main operation, I think that is also a signal in my mind that the liquidity framework or whatever the liquidity stance itself has changed. Now, again, I think we are not saying that RBI should turn around now and infuse durable liquidity and cut rates and those kind of things. We are not saying that. What we are saying is that you change the stance because withdrawal of accommodation doesn't make any sense now. Your rates have peaked. Your liquidity is in deficit. It's no longer in surplus. And therefore, the whole stance of withdrawal of accommodation doesn't make any sense. So you move that to neutral. You continue providing liquidity through repos. And as far as rate cuts are concerned, you can take your time. Obviously, we think the Fed itself won't cut before May. So there is no reason for RBI to kind of rush to cutting rates. But clearly, the stance has outlived its utility, we think, and it probably will end up confusing. Maybe in financial markets, people follow these things closely. They will ignore the stance. But in the banking system and the broader financial system, I think the stance has kind of lost its meaning and it can actually confuse people.
Okay. I have to quickly wind up. So I want some numbers from you all. Prasanna, where do you see, bond yields, whether they agree with your interpretation or not, yields have fallen. So the market itself seems to have moved that the Reserve Bank will soften. Where do you see yields, say by March or even for that matter by June? Because we are going to see bond index inclusion, we are going to see a likely softening by the Fed, your bond trajectory.
Yeah, first things first, I don't understand or I don't agree with the rally in the 10-year, right? Clearly, if liquidity is going to soften, if RBI is going to cut rates, it is the short end which should actually benefit. But in India, anyway, everyone trades the 10-year. I think the 10-year is like a shorthand for interest rate futures, I think. So everyone trades that. And therefore, that is rallying. But so I don't agree with the extent of rally because the curve is already flat. But that said, what you're saying is right. I think both these factors will play a role. Policy pivot is in the cards as well as bond inflows from overseas investors. So I think 10-year can hit 7%. I'm not sure it will hit it in this quarter itself or rather if it hits, whether it will sustain there. but over a slightly longer period, this quarter and next quarter going up to June, I think clearly 7% will get tested.
Okay. Well, Samiran, even the rupee strengthened for whatever reason. I mean, we've seen the strong debt flows all of last year, second half, as well as on Friday last week, $109 million of debt flows. So your trajectory for bonds, 10-year, as well as rupee.
So, Lata, I agree with Prasanna that the bond rally initial days in this quarter might be slightly tepid. So we think that 7.1, that sort of a range for the near term. But as we move into the next financial year, as RBI does its change in stance, and then if our forecasts are correct and RBI does 50 basis point of rate cut, and on top of it, we get the bond index inclusion related inflows, then we see a possibility of 10-year bond yield even drifting closer towards the 6.5% mark by end of FY25. On the rupee side, our near-term forecast of 80 to 80, so rupee is hovering close to that now. It is quite obvious that RBI has allowed a bit of appreciation in the new year. The balance of payment support was there for a while, even in December, but now with central bank allowing a bit more appreciation bias, it's to be seen that at what is the next level where RBI kind of stands and says that this is where the valuations they would want it to be. In terms of the overall backdrop for the currency, it has been quite favorable. So don't expect things to change in the very near term. But over the medium term, our house view is of dollar strength to come back in the latter part of the year. That could mean some reversal in the USD INR rate as well. So we expect the longer term view to be closer to 84.
Okay, got that. Thank you very much, Prasanna and Samiran, as always, running short on time. But I think both of them are telling you something very important in terms of the fall in the 10-year rate. Samiran saying that by end FY25, it could even go to 6.5. Well, our loans are tied to, market yields. More likely, of course, the repo. So watch out what they are saying. Chances of, cheaper loans are perhaps there 1 year down the line. Wrap up on Bazaar on that note. Chartbusters up next.